Okay, let's quickly talk Glencore, because this one is listed here in South Africa. It has, of course, a sort of South African CEO, Ivan Glassenberg, but it's really a global metals producer and commodities trader. It also is active in agricultural markets. Market capitalization, 945.4 billion rand. So it's a huge company, but it's principally listed in Switzerland and in London. Price to earnings ratio 20.58, dividend yield of 1.42%. Because the guys are traders, they had a lot of debt going into the down days. Look at the share chart. You can see that it almost hit the skids there at the end of that market slump in 2005, 2016, but it's since come back a lot. So it's now trading above 60 rands a share, whereas you could have picked them up for 16. So there you go. That tells the story. Joseph?
Well, you know, if you were to look at Glencore and BHP, these are the global businesses, you know, people say they will never fail. But you can't compare with Billy's. If you look from a dividend perspective, this is like 3 times, you know, Billy's gives you 3 times. The market cap also small. They are basically buying into zinc assets to just try and, you know, increase their exposure to some of the commodities. The share price was almost doubled. Can you believe it? You know, from 23, I think that was almost lowest. Nice trading.
Not surprising though, because when that time came, they were doing emergency sales of certain assets. They were scrambling to refinance some of their debt. But it just tells you the story that unfortunately this is a difficult environment, and sometimes things can go wrong even for big companies.
No, certainly. And I think they're pretty much close to their highs. I think their high price they traded was about 68 rand also.
Okay.
And I think they might be starting facing some little bit of headwinds from a price perspective.
Look, the agricultural trading business is interesting. So they basically trade crops like barley, canola, wheat. They are big players in that. They acquire those from farmers and from other distributors. They hang on to it. They judge the cycles in terms of weather. They leverage heavily on specific cargoes, using that as collateral. Then they on-sell them to the food producers. And they don't just do this in like one isolated market. They do it at global level. So they're pretty expert at that stuff. Headquartered in Switzerland, the guys are extremely well remunerated, but they're a very powerful and successful company.
No, certainly. From a commodity trading perspective, I mean, you just talked about agriculture. So I think the possibility you could say they're more broad-based rather than some of the companies that are strictly on resources, not on consumption goods.
Okay, but would you buy them now? Do you hold them in portfolios?
No.
What, you think they've run too hard and they just look a little too expensive, and it is, after all, a bit of a cyclical business?
100%. I think, as I said to you, you're almost reaching the highs where they have been, and they've doubled or trebled the price over the last 2 years.
So what you get here when you buy them is an owner-managed company run by people that are very tough, very aggressive, a little bit secretive in their methods. Okay, but we're going to pass. No, not hot on this one. Not hot. Okay, good.